Thank you for reviewing my course submission for Duke's Human Factors and AI course through Coursera. We'll be focusing on the same product and model that was handled in course 2. So let's start by regrounding ourselves on the problem statement, which pertains to stock, derivative, and other related trading opportunities. We expressed it as when trading in stocks or derivatives, things like options, futures, etc. As an individual investor, it can be difficult to identify investment opportunities. There's some context to this problem. There's millions of different trades that could be made on any one day. I believe there are roughly 55,000 different publicly traded companies in the world and well over 40 million option contracts being traded daily. Identifying the ones that match your specific criteria is a problem that is not solved well today. There's a lot of speculative, high-risk trades available that individual investors really should avoid. And then product opportunities exist in providing user-specific trading data that identifies these trading opportunities based on past trading behaviors and outcomes. Trading involves a high degree of managing your own psychology, so better understanding the investor's previous behavior and outcomes of their decisions could deliver more stable and predictable returns. So the next step after our problem statement is doing a task analysis. As you can see here, our user is an individual investor with a task of identifying trading opportunities based on market data as well as their past behavior. It starts over here on the left with a trigger event of the market opening. At that point, as you can see here in the middle, our model will consume publicly available trade data from third-party sources. The model will use these inputs in addition to investor preference data that's established during onboarding and investor behavior data that's accumulated over time to identify potential trading opportunities. These opportunities will surface as recommendations directly in the investor's trading platform via API. This will lead to the investor using this data to make decisions that lead to their ultimate outcome that you can see over here on the right, which is making a profitable trade. There are a couple of key insights that surface from this task analysis. As we've discussed, there is a vast amount of input data and potential trades an investor can make on any particular day. Rationalizing this information is something an LLM could do infinitely faster than a human could. It's just too much data for any human to process. Making this data available through API directly in the user's trading platform will eliminate friction and drive adoption of the product. The user doesn't have to manage yet another application and experience. Moving on to the UX, there are really two main touch points for the user experience. It's the onboarding flow and then the utilization of the data directly in their trading platform. Some key user inputs are the user trading preferences collected during onboarding, which would be an explicit feedback loop. User behavior data collected via the trading platform, which would be an implicit feedback loop, and then user feedback on the model and product, how it's performing, etc., which would be an explicit feedback loop. From a transparency standpoint, our approach will consist of providing the user information around data sources and privacy and compliance policies during the onboarding process, as well as during the output of the trade recommendations. We'll also provide explanations, including use and weighting of inputs. Then as it pertains to communicating uncertainty, the product will attribute a confidence level for trade recommendations, and the product will provide an explanation as to what is driving the confidence level lower or higher. There's some considerations we need to take into account from a privacy and ethical standpoint. So privacy policies will be made easily available to the user during the onboarding flow. They will indicate how the customer's preference and behavioral data is being used, as well as how the customer can opt out or modify the tracking of that data and retrieve their data should they need it. There's some implications from a privacy standpoint. Basic PII information is going to be needed during onboarding as well as model training. We'll need to comply with all required regulations such as FIPS, CCA, GDPR. We also have a hypothesis that's due to the fact we've got an API integration into the trading platform that will need to comply with some additional SEC regulations as well. From an ethical standpoint, historical bias is going to be the biggest potential source of bias. The market changes very quickly, and historical trading data is not going to reflect seismic changes, and subsequently the model may lead to some poor trading decisions in that case. The three goals of ethical AI: fairness. Our product will be agnostic of gender, race, or any other demographic data. Behavioral data will be action-based only and not need any of this demographic data to deliver value. Accountability, onboarding process, and terms and conditions will clearly communicate that the model is for input purposes only and should not be relied on to make investment decisions. Users will have clear feedback mechanisms to provide feedback on how the model is performing. And then, as we said before, transparency. All trade recommendations will come with explanations that will progressively disclose things like feature weights, use counterexamples to aid the user in understanding the recommendations. So now that we've covered everything in detail, let's summarize the product and include some key attributes of the model. Our ideal and most simple use case consists of three main components. Investor going through a low-friction onboarding process, collecting relevant trading preference data. The model will use real-time market data, investor trading preference, and investor behavior data to determine potential trades that could be made for that day. The investor will consume this information directly in their trading platform and use it to make profitable trades. A couple of the key model inputs. Again, we have the third-party data, derivative data, stock data, things like options premiums, strike prices, etc. We have the user-provided preferences around time frames, risk profiling, preferred trading strategy. We have user behavior data that's collected around, are they selling versus buying? What are their hold periods? And what are the success rates of the decisions? And lastly, just a couple of key attributes of our model. It will be cloud-based, online learning, and with online predictions. There's a vast amount of frequently changing data and a need for near real-time recommendations. And so this is the preferred method for the model itself. Thank you for viewing my course project.